The focus now on the oil companies, and this is what we're doing on our market laser segment. The news, of course, has been, we've been talking about it from the morning, which is the windfall tax cut. So on crude, there's a very sharp cut. On diesel, there's a sharp cut. Actually, on diesel, it perhaps, I would have thought, would have been sharper, but it's come down from 8 rupees to 5 rupees, and ATF prices have been, the taxes have been cut as well. Now, why is this important? This was important when the windfall taxes were first imposed 6 or 7 months back. They were important because, it created a lot of uncertainty because it raised the prospect of government intervention in the oil sector once again, in the upstream sector once again. And now that they've been cut very meaningfully, I think they're important again because it sends a very strong signal that the government is willing to respond in an aggressive way to an aggressive fall in crude prices. I think that's the takeaway here. If you remember, when they were first imposed, we had companies come on, we had not more than companies, analysts, etc., come on and raising doubts whether, companies and investors will have to live with these high windfall taxes for time to come. But that doesn't seem to be the case. So I think it's a positive signal from a company's point of view. Two companies specifically which I think get the most impacted. One is ONGC, and I'll tell you why. Of course, for ONGC, the biggest cut comes via the channel of cut and windfall taxes, which have come off sharply. But, it does show that given where oil prices are, that is crude oil prices are right now, which is about $76, $77, around about there, between 75 and 80, and windfall taxes coming down this sharply, it perhaps is possible that the government is okay with ONGC realizing between $75 and $80 per barrel on sales, on oil sales. That's an interpretation, that is a takeaway, but I think it would be fair to go with it. The gap between what perhaps the government is okay ONGC realizing, in a way, it also sets a cap. Anything above 80, perhaps 80, 85 things, taxes move up once again. But between this 85 to 70, perhaps 75 and 80, it perhaps could be a sweet spot. The current ONGC stock is pricing in anything between $40 and $50 per barrel. So there is a gap, right? There is an arbitrage. Now all of it will not be filled, but I think, this is a strong and important signal coming in from the government. The second is Reliance Industries. For Reliance, the impact is not so much from crude sales, but it is from the cut in diesel taxes and ATF windfall taxes as well. As I said, on diesel, perhaps things will come off, things will soften more on the windfall taxation front. But even then, with what has been done, I think this is pretty good news for both these companies, upstream companies, where there has been a fair bit of uncertainty because of these windfall taxes. They are there, but they've been cut aggressively to almost in line with where oil prices have come off to as well. So that's, a bit on upstream oil companies. Malu.
All right, take that point, Prashant. Thanks a lot for that. So those upstream oil companies are something that we'll be watching out for. But the other stock that we'll be watching out for is